Now, in this session, what I'm going to do is to finalize our balance sheet. Remember, in the previous sessions, especially the money flow session, where we were talking about the fact that money comes in and money goes out. In terms of money comes in, one aspect that we agreed upon, that I emphasized, was that especially at the startup phase, money has to come from the owner. The owner has to contribute because the owner is the vision bearer, is the torch bearer of the business. It's important that the owner should show their confidence in the business by putting their head on the block, making a commitment in terms of financial contribution before they can even go and source money elsewhere. So I'm going to incorporate that aspect, but there's another aspect that needs to be in the balance sheet. Remember, when the owner invests money, the money that we want the owner to put in to the business, they are doing that to get a profit. And it is the profit that they make from trading, from buying and selling, or making products and selling. It is that profit or loss that comes to increase what the owner has contributed into the business, or to decrease it when they make a loss. So let's put that into practice. And don't get confused. This is a build up on the previous discussions that we had. We agreed that the format of our balance sheet will be as follows. You'll have your assets, and please help me so that whatever I'm writing is visible, because I want everyone for all of us to move together. We must be in sync with each other. So we will start to account for those positions of the business that this is not very different from the previous balance sheets that we're busy working on. I'm just incorporating new things to make it more complete. We agreed that the baker, our resident entrepreneur, will require a mixer, and then I'm putting that mixer. We agreed on the value of 5,000. What else? Land. They will need a small factory, a small building to operate from. How much?
100,000.
10,000.
100,000 land.
Land and buildings is 100,000.
Yes.
Oh, I missed out something, which is the oven. The oven, we agreed that it would be 10,000. Thank you. I'm so happy that our resident entrepreneur is truly moving with us, because she can even see, the entrepreneur can see where we are missing the mark. That's a good sign that somebody is moving along with you. Now, we must, so this is the total, the 200,000. These are the total non-current assets, or long-term, or non-current assets, or fixed assets in the old terminology. Now we must account for the current assets. The entrepreneur took some of the money that she raised to buy the current assets.
I think we should use a black copy. Those ones.
Yeah, let me see. I think it's back.
Okay.
Yeah. I hope you have zoomed enough so that it's visible. Now, current assets, she bought stock. How much? 10,000.
10,000.
Or the stock that is remaining. Is the stock that is remaining that we haven't sold yet. She sold some of the bakery products to customers on credit.
5,000.
They are owing 5,000. The customers are owing 5,000 to the business. Now, cash and bank, what is remaining? Look, I'm going to hold on to this one before.
Could you please?
Total, I'm going to hold on to this one. Okay, you were saying?
Your ink is fading. It doesn't show.
Must I try the black one?
I think the black one will work.
Let me try the black one and see. This one, I'm not confident with this one. Just get another one. And then that is our total. Now we want to assess how, yes, money has been used, but where did this money come from? This section will tell us about that. We are going to talk about equity and liabilities. Equity and liabilities. And this will say owner's equity. What does the owner have in the business? What belongs to the owner here?
It's
Owner's
50,000.
equity is, this is what owner's equity, equity or owner's contribution. Don't forget, equity, some call it capital. Capital, she contributed 50,000. 50,000 is a contribution. And then now I wanted to introduce another aspect. Here, no, watch out, don't pick that up, please, because you are disturbing the training. The next thing here we have is, suppose she is busy working, selling the bakery products. Suppose she made a profit. Let's suppose she made a profit of 5,000 rands. Profit, let's say net profit, maybe it's net profit before tax, but I don't want to go into that. If she made a profit, that profit will come here. What is it doing? It is increasing her investment in the business. That's how you build your balance sheet. By one other way of building your balance sheet, by reinvesting into the business, plowing back into the business. So your total, the total equity that she has in the business, oh no, 55,000. Thank you. And then we account for non-current liabilities. Please tell me if it's visible. If it's not, just let me know.
No, it is not so clear.
Are you sure?
Yes, but you can see a little bit. You can read.
If it can, can be read. Non-current liabilities. What do
I
we have?
think repeat the writing. Non-current
liabilities.
Repeat on that writing, so that it becomes
Here.
visible. Yes.
The black pen. Non-current liabilities. And remember, we have these things on the other pages. On the initial module, so this is just a revision really. The new thing here is just the incorporation of this section. Equity and liabilities, and then this is like a heading, and then non-current liabilities, long-term liabilities. In other words, we are talking about your loan. She got a loan from family. How much was that?
50,000.
50,000. 50,000. From the uncle. And we have got mortgage, no?
Yes, 70,000.
Mortgage loan. Mortgage bond of 70,000. And then total. How much? 120,000, no? 120,000. Okay, and now we come to current liabilities. This one is total assets, that one. Current liabilities. They are simple, straightforward. We had creditors, ne? We bought on credit.
Could you please change your pen?
I'm going to change. Yeah, as you go down, the visibility goes down. The marker. Creditors, how much are we owing creditors? 60,000, ne?
60,000.
She's owing 60,000 to her suppliers. Those are creditors. And then, what else? Overdraft, ne?
Yes.
Overdraft, we are almost there.
30,000.
30,000, which means our current assets will be 90,000. Then, this means that the total money that we have raised, total liabilities. To get total liabilities, we'll have to add.
You can't see clearly. I think you should change the marker.
Let me change. I think we are almost there.
Repeat on the right.
We are almost done now. Total liabilities. Okay, this means will be 90,000 plus 120. How much? 210, eh?
Yes.
210 plus this is the money. No, where am I going? Am I still going? No, I can't go that far. Yeah, it's it's 90,000 plus 120, which is 210. 210,000 plus 55, ne?
Yes.
265,000 is the money that was raised. Total money that was raised to finance the business. 265,000. The total money that was raised to finance the business. So,
can you repeat on that amount? Just to rewrite on it.
Okay, and I'm saying it as I write it, 265,000 is the total of what was contributed by the owner, which was 50,000, plus the profit that he made, 55,000, that's what belongs, the value of the equity that the owner has in the business, plus the 120,000, which was raised from family and from the bank mortgage loan, 120,000 plus the 90,000 that came from the creditors, suppliers, overdraft, and a total amount of 265,000 was raised. How was it used? She bought non-current assets, things that she needs to use, keep in the business to help her run the business. It was 200,000. And then she bought stock for 10,000. She gave credit, some stock away on credit to customers for 5,000. So if you look, 215,000 has been spent, and in the bank, what is left is 50,000. And then the total here is 265,000. This is the summary of the balance sheet. But in order this is the total picture now, including the contribution of the owner and the profit that she has made. This is just the summary of the balance sheet, and the important thing is the methodology, how to promote, to simplify the learning and teaching of the balance sheet. But otherwise, there's a lot that goes into drawing up the balance sheet, because there are other statements. There are other statements such as your profit and loss statement. The balance sheet doesn't stand on its own. You have to do your profit and loss statement, your cash flow statement, and then ultimately the balance sheet. Because the cash balance, this cash balance must come from the cash flow statement. And the stock balance will also come from the cash flow statement, how much stock was bought and how much, and all those kind of things. And also, so they feed into each other. The profit will come from the income statement and all the other accounts that you keep in your business. So this is the total picture. The main idea was to simplify the learning and teaching of the balance sheet. But to get the full picture, go and get yourself the balance sheet dialogues, the book which will give you the complete picture. Thank you very much.